Welcome back to the Metro on WDET. I'm Robin Vincent. President Trump made news recently by threatening Walmart if it raises its prices because of the U.S.'s flurry of tariffs. The retailer said it might have to increase some prices because of the high cost of the global trade war. But Trump wrote on a Truth Social post that Walmart should, quote, eat the tariffs, not pass them on to customers. The president ominously wrote that he'll be watching. Now, this comes as a new survey by the University of Michigan finds confidence in the U.S. economy steadily eroding. Researchers say the widely watched Consumer Sentiment Index has shown a sharp decline throughout this year and is now at a 3-year low. The director of the survey, Joanne Hsu, said respondents have a somber view of the nation's financial future.
One of the huge factors that we're hearing from consumers is they're worried about the impact of trade policy on the economy. This month, we had over 2/3 of consumers telling us spontaneously about the impact of tariffs. And largely speaking, these concerns are not positive. People who mention tariffs, they're really worried about inflation coming back. They're worried that unemployment's going to get worse. And it's not just about tariffs being high. After all, we did capture a few days of interviews after the pause on China tariffs. They're really worried about uncertainty, unpredictability, and instability with policy. And they know it makes it really hard for businesses to plan and for consumers to plan as well.
Now, I understand that this is perhaps the lowest in 3 years that you guys have seen the consumer index be at this state. Is that correct?
That is correct. We are near historic lows, and consumers are really feeling quite negative about the economy across multiple dimensions: the personal finances, buying conditions for big ticket items, business conditions, and labor markets. It's very loud and clear across demographics and across aspects of the economy.
Now, if it's been going down for a number of years, and that would have included the previous administration and the White House. So have you noticed a difference since the Trump administration took over from the Biden administration?
So that's not quite right. The sentiment did rise right after the election. There was a temporary post-election bump. But in December, as Trump started talking more about his planned tariff policy, that's really when sentiment started to take a turn for the worse. And indeed, when we look at the major policy announcements that have happened, the announcement of tariffs on our North American neighbors, the announcement of the reciprocal global tariffs, after each of these big announcements, consumer sentiment worsened. And again, the major reason for this is people are concerned that inflation is going to come roaring back. And inflation has been the number one thing on people's minds for several years now. In 2022, when we hit the all-time historic low, that's when inflation was raging, and consumers have been telling us loud and clear since then. They're really worried and concerned about cost of living.
Is there any positives that you think you can take from what you're seeing in the index?
I'd say the positive thing is that it hasn't gotten that much worse from last month. We had 3 consecutive months of very, very steep decline. So the fact that it didn't tank further this month, I think, should be welcome news. The other thing is that consumers are bracing for impact of tariffs, but they don't actually believe that inflation has already gotten out of control. They recognize that inflation has slowed over the last couple of years, but of course they remain frustrated by high prices. We had historically low sentiment in 2022, but consumers were still willing to spend despite that lack of confidence. One of the big differences between then and now, though, are consumer views of labor markets and their incomes. After the pandemic, labor markets were very, very strong. Consumers' incomes were very reliable. And so in spite of the fact that they felt terrible about the economy, they were willing to spend because they had the incomes to support it. Today, it's different. Consumers are starting to tell us that their incomes are getting weaker. The expected probability of job loss has gone up. We have 2/3 of consumers expecting unemployment to worsen in the year ahead. So that labor market confidence we saw 3 years ago just isn't here anymore, which does not bode well for consumer spending going forward.
Okay, so that is a grim picture painted by Joanne Hsu. She directs consumer surveys at the University of Michigan. She spoke with WDET's Quinn Klinefelter, and Quinn joins us now. Quinn, welcome back to the Metro.
Thank you.
So, Quinn, as we heard, the last time confidence in the economy hit rock bottom, people were still spending. Why does it seem like a more grim situation this time?
Well, the researchers say one of the big differences is the income level of the people that they surveyed who are concerned. Typically, the wealthiest groups, who often drive aggregate spending in the U.S., feel better about the economy. That's not the case now. All sectors of the population seem to be worried about their immediate economic future. And in previous surveys, those responding did not point to one single factor that made them worried. This time, they do. It's Trump's tariffs and trade war. And not just fear, but an expectation that inflation is coming. And that's running well above what was seen in 2022 when inflation was actually high. In fact, when people responding to the survey assessed their own personal finances, that had dropped to the lowest level since 2009. And their outlook on the nation's finances as a whole is at the lowest level ever on record, according to the survey.
So, Quinn, it sounds to me like what you're saying here is that a lot of this is psychological. And what I mean by that is that President Trump and his talk of tariffs have sowed so much uncertainty that people across the board just have this feeling of anxiety hanging over them. Does that track with what you have found in your reporting?
Yeah, when you went out before the presidential election, the last one, I mean, that was the overriding factor among everybody, was that the prices were so high and that they just couldn't afford to get a half a loaf of bread anymore when they used to be able to get at least one and a half for the same price. And that's something that has been a problem for quite a while that Trump had claimed he would address when he got in. That's not exactly what's happened since, however. And when you look at it, not all the economists that are talking about this thing actually agree with this particular forecast that's come out from the University of Michigan. They had a study out last week by the Kansas City Fed, and they found that consumers' dour attitudes about finances did not really alter what the Fed was predicting that people would do, actually. The Fed chair, Jerome Powell, for one, says there's often a difference between how people feel and what they'll actually spend, and that there's a pretty weak link between the two. Powell does say that the difference this time is the size and the speed of Trump's economic actions with tariffs, and that is creating the fear that you were talking about. Plus, the government's data shows that inflation's actually cooling, and they say that there's few concrete signs of any mass private sector layoffs right now. There was even a surge in retail sales over the past couple of months as consumers apparently tried to get ahead of any tariff-related costs before they started affecting prices significantly. And consumer spending is what powers the U.S. economy. It's responsible for about 2/3 of the overall U.S. economy, and it's one of the major reasons why we haven't yet fallen into any kind of recession.
Quinn, and yet President Trump is threatening retailers like Walmart. And Walmart is not the only one. Is that right?
Yeah, there's been at least a couple others recently. Last month, Amazon was reportedly considering displaying an additional so-called tariff charge next to its listed prices. And the White House, in a press availability, called that a, quote, hostile and political act. The press secretary for the White House even held up a picture of Amazon chairman Jeff Bezos. Trump called him and complained, and Amazon said the tariff pricing display was not going to happen. Then earlier this month, Trump threatened to place a 100% tariff on Mattel, the company that makes things like Hot Wheels and Barbie dolls. Remember the president saying, tariffs might mean you can't buy your child $30 for Christmas, just maybe $2. Well, Mattel officials said they simply could not manufacture toys solely in the U.S. and still sell them at any kind of an affordable price. Trump countered that by vowing to levy this huge tariff on Mattel, saying the company would then not be able to even sell one toy in the U.S., which he said is their biggest market. It's the same kind of rationale that he's using with Walmart, that these companies are so big that they can absorb any extra expense that a trade war would create. Trump wrote that Walmart made billions of dollars last year, more than analysts even expected. And that is true, actually. Walmart did have a strong 2024, in part because consumers were looking for bargains, and the retailer's known for having pretty low prices. But mainly it's because Walmart is such a massive operation, and its CEO says that it still had a razor-thin profit margin, less than 3% or so. So Amazon's CEO said he works for Walmart's, or not Amazon rather, but Walmart. The CEO said he works for Walmart's shareholders, not for Trump. And if it was going to keep its margins steady, then it could absorb some, but not all of the costs from tariffs. It would have to pass some of those on to consumers.
Quinn, as you're describing all of this back and forth, this saga right now with this trade war that President Trump has created, it has me thinking that this is a bit ironic because Trump won re-election in part by promising to take actions that would lower prices for Americans. And now there is all this fear surrounding higher prices. And it's not just Americans, though, who are really worried right now.
Yeah, economic concerns are affecting other countries, and beyond them just being mad about the U.S. trade relationship with them. One of the most important nations, maybe to watch, is China, the overall biggest target of Trump's tariffs. Chinese officials have remained defiant, which the Trump administration didn't count on. They plan to offset tariffs by pushing for their citizens, the Chinese government does. They want them to buy more Chinese-made products. They had rolled out a stimulus package, which included more subsidies. They predicted that if Chinese households spent just 1 or 2% more as a share of its GDP, that would offset the overall cost of tariffs. Now, China was also offering rebates on electric vehicles built there and price breaks for consumers who would trade things like old smartphones or air conditioners or refrigerators. But Chinese consumers do not seem that confident in the global economy either, though, even with all these efforts that their government's been making. Economic growth there has slowed. The property sector, which counts for much of China's household wealth, has seen some pretty big changes. And unemployment for younger people in China has remained high for quite some time. The country's seeing what some of them there call a consumption downgrade. And Chinese consumers have been looking for discounts, just like here. They go to discount breakfast meals. Stores there are having big sales and big price wars with other retailers. And there's been a big push among some people in China to buy gold, which many see as a good investment in times when you're unsure about the economy. Some Chinese analysts say the country also should build a stronger pension and healthcare system that would make consumers more confident, which is, kind of an interesting juxtaposition, Robin, when you look at what the U.S. House is considering right at the moment in its latest budget proposals. Mm-hmm. And if we want to bring it back to the Consumer Sentiment Index from the University of Michigan, remember it was a preliminary look at this month. As we heard earlier, the survey had a few people who responded after the U.S. and China paused their tariffs. The true test is likely to come later this month when the university releases its final results to see what that pause has actually meant for people and their expectations about their finances.
We're going to leave it there. WDET's Quinn Klinefelter has given us a lot to think about. Thank you for your reporting and for joining us here on the Metro.
Always a pleasure, Robin.
From the WDET newsroom, work on the Mackinac Bridge won't be done until at least May 29th due to delays in repairs. The Mackinac Bridge Authority says poor weather delayed the start of planned maintenance. Travelers planning to visit the Upper Peninsula over the Memorial Day weekend should expect lane closures and slow traffic. The authority says holiday weekend peak hours are between 10 a.m. and 4 p.m. Hazardous materials crews spent hours cleaning up an acid spill on Middle Belt Road, south of 8 Mile Road in Livonia. The city's fire department and that of Farmington Hills responded to a report of a truck leaking ferric chloride onto the pavement. The chemical is used to treat sewage and industrial waste and can burn a person's skin. 8 Mile Road is closed between Middle Belt and Fremont Street. Coming up, Detroit gave the world techno. Born from struggle, soul, and circuitry. Now, movement returns, and we ask what this festival still means to the city that made the music. This is WDET-FM, Detroit Public Radio, your connection to news, music, and conversation. And this is The Metro. Stay with us.